Hello there, Mavericks. This is Rob Reinhold. It is December 8th, 2022, and we finally had a little bit of an update today. So let's take a look and see what happened today. We are now looking at 4 down days starting from last week. Today was the first day after 4 down days where we actually went higher. So this marks an end to the 4% decline. So we made a move down the last 2 days of last week. First 2 days of this week, we had moved down 4%. That's a pretty large move for the S&P in just a couple of days. And today we did get a bounce. Look, it wasn't anything tremendous, but we do have to admit it was a bounce. One of the things that is helping this market is the belief that the Chinese economy is going to start opening back up from COVID restrictions. If you want to take a look at ETFs like the KWEB, which is the Chinese ETF, you could also take a look at the FXI, another Chinese ETF. You can see that these things have already had massive bounces, and it's really helping the rest of the world. Also, on another positive note, the dollar and interest rates have really calmed down. So we have interest rates that are now down below 3.5% after topping out at 4.2%, and we have the dollar that is well off of its high. All of these things are making for a more conducive market situation. Here's the problem. Remember, the market just went down 4%. All of these things were happening 4 days ago, and the market still went down. I just think today is a bounce. We do have some huge news tomorrow morning with the PPI. We will be talking about that at the end of this video. Let's go through all the numbers here. Dow was up about 0.5%, S&P up 0.75%. NASDAQ was the outperformer. Remember, we've been talking about how bad the NASDAQ has been underperforming. I said on the trading room over the weekend that if the dollar and rates come down more, we're likely to see the NASDAQ start to outperform. It's still way too early to call that, but we're starting to see that in the price action. Oil is all the way down to $71 a barrel. That is definitely going to have some repercussions when we take a look at inflation measures. The advanced decline line, you could see that 60% of stocks went up today, so it was a very mildly bullish day, and we now have 63% of all stocks trading above the 50-day moving average. That is down from about 73% just a week ago, so the markets have definitely weakened off where they were just a week ago. If we jump into the S&P chart, we can see that we have now pulled back, and we pulled back to this pretty key support level. And on Tuesday, it looked dicey, like it was going to break, and it held. Yesterday, it looked like it was going to break, and it held. It gave us a doji. Today did give us an up candle and a trade above Wednesday's high. Now, that is about as all I can say, because this is not an exciting bounce. You want to see an exciting bounce like the one we got back in mid-October. That was a really nice candle, and you can see that led to 2 more big up days after that. That is not the same kind of candle. This candle was a pretty wimpy bounce, but you cannot deny that it was a green candle. Unless you're colorblind, you have to say it's a green candle. And guess what? If you are colorblind, people that can see the color are telling you it's a green candle. You have to admit that this is potentially a bounce. We reached a key support level. We got the doji. We got the bounce candle. Tomorrow morning's PPI will definitely confirm this. Now look, I know a lot of you don't feel bullish, and that's fine. You don't need to feel bullish. A lot of you don't feel like the market could possibly bounce here. Okay, keep feeling like that. But remember, as traders, we don't trade our feelings. We trade the candles. And if we get a green candle tomorrow, we have to assume that we're probably going to go back up and test the top of this range, which is somewhere around 410 on the SPY. Other than that, you can't be any more bullish than that this is just a bounce within a sideways range in the time being. We jump over to the NASDAQ. NASDAQ, same thing. We're right down at this key support level. We got our doji. This candle's a little bit better, but not great. Okay, the most bullish you could be is that we're going to run up into the 295 area. Okay, that's fine. But nothing here tells me that, hey, we need to get overly bullish on anything. We're not there yet. So where we can't say the market is falling, we can't also say that the market is going higher. As we've said for the last couple of weeks, we are very mildly to moderately bullish, but that's about it. We are not thinking that this market is going to take off and run. The big bounce we got in October and early November, that's likely done. We are consolidating here at these levels. The heat map is simply showing us that there is spottedness in there. Take a look at semiconductors. Had a very, very strong day today in the semiconductors, and really all of technology outperformed. Let's go ahead and just update our market outlook. In our trading room session of the weekend, we had a +2 market, and we had a +1. Once we broke down below that 20-period moving average on Tuesday, we definitely had to downgrade our monthly outlook because, again, we're trading below the 20 SMA. And we have to also downgrade our weekly outlook from a very mild up week to here we are on a Friday. We're still down 2.6 for the week. We are likely not going to jump 4% tomorrow. We're probably going to come back a little bit to around to the zero if the PPI is correct. So that really is the question. Is the PPI going to move this market back up to those top levels? Let's go through some trades here. This trade is from one of our traders in our Wednesday live session that we hold. This is AbbVie. As a young trader, I could have never taken this trade. I would have looked at this and say, oh my gosh, I've already missed it. It's up so much. Let me go find something that hasn't gone up yet. I didn't understand it. This stock has way more buyers than sellers at the current moment. I know that's going to change. It's going to change sometime, but right here, right now, I know that at least the train is going north. The big question is, how long is it going to keep going? It's all about choosing the right strategy, the right option strategy. So I really like the 160, 165 diagonal call spread. Selling the in the money call a little bit below, that means if we pull back, I'm isolated. And if it takes off and runs, I'll make a little bit of money and I'll pack up and I'll go elsewhere. So this is AbbVie on the bullish side. Another bullish one we talked about last week. I've been waiting for this one all week long to trigger. We had a run to new highs, and we've now had 1, 2, 3, 4 pullbacks, and we got a nice confirmation candle here. This one's ready to go. This is a high-priced stock. This is Intuitive Surgical, ISRG. This is why we like to use options. 270, 280, bull call spread. You can absolutely trade these higher-priced stocks with these options combinations. On the sideways trades, we have Kellogg's. You can see Kellogg's doesn't want to go anywhere. Doesn't want to go anywhere. I was looking at building a trade on this one. Here is one of the problems. This does only have $2.50 strikes. So we basically are going to need to choose, is 75 our midpoint or is 72.50 our midpoint? Because we're going to build the trade around these strikes. As you can see, it's pretty much equidistance from where we are. We just basically have to say, okay, over the next 6 days, because I'm going to play this for the December expiration, do I think over the next 6 days we're going to be slightly higher or slightly lower? Now, here's the great thing. Tomorrow, the PPI comes out before the market opens. I'm going to have a good idea of where the market is going to be over the next 6 days after the PPI. So if the PPI is bullish, then I'm going to be shooting for that 75. So again, doing the 72.50, 75, 77.50 call butterfly. If the PPI is sending this lower, then I'm going to shoot for the 72.50 strike. And then I'm going to be doing the 70, 72.50, 75. As you can see here, we really kind of have to pick, okay, is it going to be moderately higher, moderately lower? We think that it's not going to break out of any of these big support and resistance areas. So we really like this trade here on the sideways. And on the bear side, another trade from one of our traders in our Wednesday session. Really like this here. This is Novavax, and it's in the biotech sector. They do vaccines. And you can see it really hasn't participated with the market rally. It's completely doing its own thing. This is exactly what we want to focus on. When the market has been slightly bullish, all of our bearish trades, they need to be marching to their own beat. Because the market has been pulling a lot of things higher. This thing's saying, no, I'm not going anywhere. This is where we love like a bear call spread. So a 16-18 bear call spread. Basically, you're playing this in a very tight range. If it breaks out and runs above 18, okay, you've got your max risk already calculated. It was a loss. If we do turn down and it breaks below 16, that's a max gain. It's a very, very controlled trade on Novavax. Let's talk about the PPI before I wrap this up. The futures are likely going to be up or down at least 1% after the PPI. I think 1.5% is more likely. I don't think a 2 or 3% move is going to happen because we do have the CPI still next Tuesday, which is way more important than the PPI. So I think there's going to be a muted response that isn't as big as the CPI. I do think the CPI can produce a 2 to 3% move. I don't think this PPI does, but it's going to be a big move nevertheless. If we have a move higher and it holds tomorrow, then I think you can say that was a bounce at support and we're going to trade up to resistance. Now look, we don't know that's going to happen, but that has to be your technical analysis. If we do not bounce tomorrow, we actually fall, and if we close down below that support level, we are now going to have to ratchet down our bullishness in the market down to a 0 or maybe even a -1 based on where we close. The report comes out at 8:30 a.m. Headline number and core number are both expected to be in as plus 0.2. Last month it was at a 0. We'll have to see what happens here, but the market wants to see lower inflation. That's really going to help with equities. That is the market roundup. Thanks for joining me. Take care, everybody. Goodbye.